So there's two main stories that most of us are watching very closely right now. The first is the potential looming first ever US default on its debt, unable to make interest payments and even pay for basic necessities like Social Security. And the other is the expiration of Title 42. This is an immigration policy, and it's going to be repealed tonight, potentially triggering a cascade, a waterfall of tens of thousands of migrants per day into the US through the southern border. As you would imagine, both of these stories have pretty direct, both immediate and long-term consequences for the US economy, and I think it's worth talking about. And then once we have a better understanding of these two events, I want to try something new and rank them on my bearish versus bullish scale. Hopefully it's a fun concept. I hope you guys enjoy. If you do, like, subscribe, greatly appreciated. And let's do this. Okay, let's begin with the potential US default, because that undoubtedly has the largest and most immediate ramifications. So this article from CNBC is titled "Failure to Raise Debt Ceiling Would Be an Economic Catastrophe," and that's coming from the Treasury Secretary Yellen. Now, some brief background information. The debt ceiling is kind of a unique thing to the United States. It's not the budget, right? That's when Congress votes on how much money they're going to be spending that year. This is a completely separate thing that just allows the US to take out debt to then fulfill those previously agreed upon obligations. But in the world of politics, they like to take this quirk we have in the government and use it as a political bargaining chip. And that's the whole reason we're in this situation to begin with. Both sides are trying to use it to their advantage to get some kind of a victory. And as of right now, there's a very big gap between where the president is and where the Republicans are. And again, this is according to the Secretary Yellen. Economists on both sides of the aisle agree that even a very brief default would send shockwaves through the equity markets and send interest rates soaring. The dollar is regarded as the bedrock, safe asset in the entire global financial system. It's trusted and is the ultimate safe asset, and the failure to raise the debt ceiling, impairing the US credit rating, would put that at risk. So that is the real, I'm going to add, longer term concern here. So this is potentially catastrophic in a lot of different ways, and the hard thing here is that there's few places to hide financially. Even international markets are most likely going to be heavily affected by this. So taking a look at some of the numbers, this is physicaldata.treasury.gov. So beginning with revenue, these are the main sources of revenue for the US government. Of course, we have individual income taxes, corporate income taxes, Social Security and Medicaid taxes, and so on. That accounted for a total of $269 trillion. But the problem, of course, is now when it comes to how much money we spend, which is $3.611 trillion. In this graphic, we see the spending by category for year 2022. And if the US cannot pay its bills, these are those bills, beginning with Social Security, the single largest expense on the US budget, for a total of $1.22 trillion. If the US defaults, there's at least a chance for a period of time some or all of Social Security payments will not be paid. I think you guys can see how this can have massive ripple effects throughout the economy, considering that most people that are retired above the age of 65 rely solely on Social Security for all of their spending in the economy. So if this gets cut off, it's going to have a major effect on the economy. That's followed by healthcare at nearly another trillion, income security, national defense, Medicare, education, training, and then right here is net interest. So for us investors, this right here is going to be the one of the major impacts of a potential default. The interest on your treasury bonds might not be paid. And this just has so many ramifications for the global financial sector. One of the biggest ones is that the Fed funds rate here in blue is used as the article said from CNBC, the bedrock. It's a benchmark, and it's what everything else is based off of, at least loosely. So in this example, the green line is the 30-year fixed mortgage rate, which of course massively affects the real estate market. And the red line is AAA corporate bonds. The blue line, the federal funds rate, is supposed to be the risk-free return because it's backed by the full faith and credit of the US government. Even AAA corporate bonds are more risky of an investment, and thus in comparison to the federal funds rate, they have to pay you a premium for that risk. So if we have the first default in history, then this is no longer a risk-free return, and thus investors will demand higher interest rates. And this blue line is going to potentially spike. And of course, it's going to cause everything else to also spike. There's some predictions that if there is a default, we could immediately have a crash, a recession on the same level as '08. Unemployment can also have a massive spike to say 15-20% because many companies keep a large cash balance in US Treasuries, earning that risk-free return. And of course, if there's a default, that is definitely going to adjust the value of their cash. Now moving on, the next crisis we have going on at the moment is the expiration of Title 42 immigration policy. Title 42 is a pandemic-era policy put in place by the Trump administration that immediately expels migrants without providing asylum hearings. So essentially, it was a fast and easy way to turn away people at the southern border. Now, this policy is set to expire tonight at 11:59 in conjunction with the end of the COVID public health emergency. And the big fear associated with this is Homeland Security officials predict 10,000 migrants will try to cross into the US per day after Title 42 lifts. Now, regardless of your political opinions here, I think it's safe to say that the current situation on the southern border, when you listen to news reports and you just see images of what's going on down there, it's complete chaos. Right now, nobody is getting what they want. On a human level, it's very sad to see. And of course, this has direct consequences for the US economy. Having to patrol a border that I think is nearly 2,000 miles long and apprehend 10,000 migrants a day is a huge drain on resources and is not sustainable. However, immigration on a long-term basis is actually a key growth driver for developed countries such as the US. So migrants, of course, boost the working age population, increasing the productivity and GDP of the overall country. Of course, there has to be control in place, but when done properly, migration is undoubtedly a huge driver of economic growth. Another reason why immigration is so essential for the long-term health of developed countries is because developed countries, I'm sure you guys noticed this, are beginning to have a population crash. The birth rate across the board in the Western developed world is well below the replacement rate. South Korea is one of the strongest examples in this field, and last year, their population shrank by 123,000 people. And this right here is a visual format of the population. It's called a population pyramid because it's supposed to look like a pyramid. We can see here on the y-axis the age, and on the x-axis the percentage of the population in each respective age group. And essentially, when it becomes an inverted pyramid like this could potentially spell death for an economy. The simple reason for this is because when people retire, they are now a net loss for society, right? They consume resources without producing any, and you have a smaller and smaller young population to support a growing aging population. And by the year 2100, the population of South Korea is projected to be roughly half what it is right now. And right now, we have no idea how this is going to affect the long-term prosperity and economic growth of these developed countries. Of course, labor productivity continues to increase with technological advancements. So each worker is just more valuable than a worker 100 years ago, and that trend will definitely continue. The latest advancement in this category has to be the efficiency advantages of AI systems. But even with increasing efficiency, if the population continues to shrink and gets cut in half, the growth is just going to be limited. And when it comes to China, they just peaked in population and they're about to face a similar path as most other developed countries. This is why some people say that China is actually not going to overtake the United States as the number one economy because their best days are behind them. Now, the United States, being a developed country, also has a very low fertility rate. It's below the replacement level. But you can see here that the United States population is still projected to grow over time. In fact, by the year 2100, it could be 100 million people more than it is right now. And the people filling that gap are those coming to the United States via immigration. Those extra people are helping to stabilize the population pyramid. And with a slightly growing population, or at least a stable population, when you couple that with the increases in labor efficiency via technology, the United States should still have some pretty good growth ahead of it. So as promised, let's go ahead and rank the impact of these two crises that we face on my bullish versus bearish chart. So of course, when it comes to the US potentially having a default for the first time ever on its debt, this is essentially as bad as it gets. And hopefully this doesn't happen. It doesn't have to happen. It's just a political decision. But considering everything is linked to the federal funds rate, if there's a default here, it's just not going to be pretty. Now, migration, on the other hand, yes, right now in the short term, it's a negative. It's a drain on resources. But as we saw, considering the greater overarching trend of depopulation within developed countries, having high levels of immigration might be the only way to sustain economic growth. And thus I have to put this immigration issue kind of bullish on the scale. Of course, there's so many issues with the legal immigration process in the United States currently, but if they can sort this out and we can have a steady flow of young working people into the United States economy, we're all gonna be better off because of it. But let me know your thoughts in the comments below. I hope you guys enjoyed, and I'll see you guys in the next one.